The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
A wonderful day at the headquarters of technical trading and investing. It is TFNN.com. We've got a market that's up 10 points today, and probably not a real surprise. I made a lot of hay Monday, starting with sending an article to Tom during his show about what happened against the last 17 government shutdowns, and we basically found out it was a draw. Nothing really happens. And, of course, you actually find the truth out. No one's eager, apparently, in the press to push it out. But what you find out is that over the last shutdowns, at least in modern history, back through the 60s, everybody that's let go has gotten their money once the shutdown was over. So kind of an enforced holiday for everybody. That money is spent the next month or given away for the most part. And no real big lingering issues. So for the government shutdown, not such a big deal. Of course, we turn our heads a little bit out farther to a government shutdown, and really not a government shutdown, but the Treasury shutdown. And not paying our bills, and that goes a little further. Why they say we can go to the 17th, is that right, 17th? It is a little bit more of a bigger issue in paying the bills. Now, it depends on who you listen to. We could go for months if we redirected the right money in the right places. And some people that basically say that 1 minute might as well be 2 years, and I don't subscribe to that, but probably somewhere in the middle is the true answer. But I think we had a little press meeting out there this morning with the Speaker of the House. A little after that, we saw some apologies by the head of the Senate. Everybody was getting a little hotter under the collar, and I think that apology kind of calmed the waters a little bit. We're seeing a little movement. Of course, the president's off on a trip, so I don't suspect anything's really going to happen till he comes back. I think he leaves tomorrow, but it is real hard finding it. I actually looked on the schedule, and of course, no one's doing the websites anymore. Those people have all let go at the White House, so we really don't know. I've read the articles, but I think he's gone for a couple of days starting tomorrow, going to Bali and what else was it? Indonesia. And what can you say? Well, we're up 10 points. Volume was very light as they pushed the market back down again. We're only turning 1.7 billion shares on the consolidated tape. Yesterday in the DIN, not too after the end of my show yesterday, pretty much said that anything with a close above 1686 is probably a fairly decent buy signal. We've had 3 attempts to push this market down. Volume pretty much gets to 1680 and just falls out of bed, even though they pushed the market a little faster, probably with the help of a lot of high-frequency trading. It just doesn't last very long before we start moving back up. And I suspect that everybody is waiting for some kind of settlement and looking for the bounce that comes out of that and wants to sell into it. So I don't think anybody right now thinks that it's a wise decision to sell. If they're going to sell, they're probably going to sell on the bounce. That's going to take us probably to 1729. I suspect it happens all in one day. And at that 1729, we're either going to have volume or we're not going to have volume. And at that point, we're going to know whether we're going 200 or 300 points higher or 200 or 300 points lower. And there's nothing really out there. We're getting into earnings seasons fairly quickly. And there isn't a great deal out here to really tell us that we're going to have a lot of blowouts like we had last time. Everybody significantly continues to talk their stock down. And, of course, lo and behold, earnings surprise. Of course, not all of them have, but there are a lot of people out there sandbagging. The question is whether or not they're going to be able to keep up with fourth quarter revenues. It's especially if you're a retailer that sells a lot in the last quarter of the year. If your third quarter isn't very good, most people aren't thinking that your fourth quarter is going to be that much better than the fourth quarter a year ago, which is normally what we're looking at. But it is going to be interesting. Anyway, there's not a whole lot going on, of course, other than everybody fixating on the government and the government shutdown. Interestingly enough, there's some fairly decent articles about why the government is set up the way it is. Most people would think, well, the president, whatever he says goes. Well, the very wise founding fathers wanted there always to be some arguments between everybody. They just didn't want everybody rubber stamping everything going through. They gave one body of the Congress very short appointments, 2 years, but they also gave them the power of the purse. All spending bills, all taxation has to originate in the House. And I guess there's some belief that if you are president, that part of the Constitution just does not apply anymore. Or if you're in the Senate. So basically, we've got two people mad at the third. The third actually has the constitutional powers to actually push and actually tell us what we can pay and what we can't pay. And just very few people even understand basic government anymore. It's more important to push in school that mommy has two daddies, or all the other crap that they're pushing in school these days, other than things that probably they ought to know. Anyway, I digress. We're looking at a few things moving out here, and probably the one that I talked most about yesterday at the end of the day was a ETF for the euro dollar. And wow, we've got a nice move in that today. The dollar index up 40 cents very strongly today. And is that the bottom? Hard to say, but certainly was the best looking chart that I could find in anything. Not really surprised we got a 40-cent jump out of that. Of course, that's not huge, but probably the beginning of a bottoming process. And I suspect if things stay the way they are on those euro dollar ETFs, we're going to have a fairly significant buy signal at the close today. Okay, now other things we have going on in the market. Pretty much all this oxygen is being sucked up in the press, but we have a few movers out here. I have actually gone long one stock today and short one stock today. I can't really say that I would want to be either long or short any of the indexes with all the headline risks out here. But there are a few stocks where the fundamental values are so great, and to tell you the truth, I've been 100% cash since Monday. I haven't found anything that truly looked really great besides that euro dollar trade yesterday. But I saw two stocks that came in today, and I put them in the Tech Insider, and one in my daily trading newsletter too. And it's, I think it's pretty good. There's been a big lie out here this week that a certain company's margins are going higher. And lo and behold, we found out Walmart's going to come out and whomp them. And I think probably a great time to actually look at shorting some of these high flyers. We've seen some of them blow off. Of course, I've been talking a lot about 3D printers out here, and X1 This thing's finally kind of bottomed the first time. Probably going to do a little ABC, so you can see a nice retracement out here. Let me go ahead and set up the retracements. These are going to probably be big fat areas, but you can see the thing potentially bounce back up into the $55 to $60 range, and that set up the next ABC down. This thing the wheels could just fall apart and fall off of it right now. But very, very strong volume. This is going to take a long time for this thing to consolidate and go sideways. But we've had a lot of super high flyers, IPOs that had little fundamental underpinnings so far. This may one day be a really great company. But we've got to remember that this is a company that when IPO'd with $20 million in sales, it was pretty easy to figure that their IPO lockup was coming out. What I didn't know, and I would have held on my short a little longer on this thing, was that they had to go to the well already for more money. Secondary filings are fairly common with these smaller stocks too. Going in and becoming an IPO means that you have fairly quick access to money, which is why companies do go public. We're going to talk about tonight on the second hour of the Tom O'Brien Show. We'll be doing the Tech Insider. Tom is going to be doing 2 whole hours. I suspect probably talking a lot about gold in the first hour. We're going to be talking a lot about technology with me in the second hour. But a lot of stuff going on here, a lot of stuff in a brave new world, if you know what that means. But we'll be taking a look at it. Anyway, what did I want to look at? Ooh. I could probably find it up here. Unfortunately, the website I get all my news on has decided they just had to change everything. So I'm trying to find out actually where I get... oh, they made it drop down. Don't you just hate it when people mess with something that's worked fine just to make it look a little better? Not work any better, but just look a little better. But I wanted to look at the NASDAQ real quick and see if we have any big movers out here. And the answer, probably not a whole lot different today. Yahoo's up a little bit. Let's take a quick look at that real quick. And I'm kind of surprised, actually. This thing continues to move. Actually, this one, what I'm really trying to point out here is probably... Let's turn this down, make this a little plainer out here. Is a fairly decent level. We talked about, probably what, in August? I think it was August. We talked a lot about confluence levels and where you wanted to buy stocks on retracements. This is a good example out here, a teachable moment if you want to understand it. If you go back to the April 18th low at 2270, on Yahoo, you'll see how these Fibonacci retracements set back up. Hopefully you're watching on Tiger TV or in the den. But a very, very nice setup because you've got a previous high of July 18 coming in almost at the exact same levels as where Confluence will come in. We'll talk a little bit more about Confluence today, but a good teachable moment here in Yahoo. Anyway, we'll be back in just a few moments.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And welcome all back. We're going to talk a little bit about Yahoo and Confluence. Tom and I did a webinar, what was it, in August? It had to be in mid-August. About Confluence, for the most part. We're going to be doing another Art of Timing the Trade Charts webinar, and that will be on the 16th. It's on the TFNN.com front page now. If you'd like to learn a little bit more about the Art of Timing the Trade Charts and attend the webinar, or if you're already a Art of Timing the Trade Charts subscriber, you can go and find out more about that. But we'll be doing that on the 16th, and you have the opportunity to sign up for the first month for $1 and learn a little bit more about it. But if you've read or followed Tom O'Brien's methods, read his book, you can certainly follow in. And certainly if you're using Timing the Trade Charts, the Art of Timing Trade Charts, we'll be going through for about an hour or more on more techniques. And, of course, last time was a great deal about confluence levels. That is where 2 different levels of Fibonacci retracements come back in agreement. And I'm showing one here now. I'm going to clean it up if I can. A little bit much here. Good example, though. But normally, if you can get 2 things to agree, like a previous high and a confluence level, and that confluence level is very, very tight. Let's say I'd like to see it a 0.5% of the price of a stock. In fact, we gave a great deal of hay on how Apple actually came into that confluence level and missed it. It was a $514. It got within the absolute top projection within 75 cents. It works very well if you work off of time frames that are fairly long and significant highs and lows. And the art of timing the trade charts automatically figures those out. And you'll see that you could probably maybe pick one different level out here. But the math is already, statistical engines in the art of timing the trade charts picks the most significant ones. And you'll see that you've got a good chance of finding your support at about 30 bucks. And what do you have out here? You've got a nice high volume high right out here on July 18th at 29.83. So you can see both of those pretty much lining up. Any pullback would be where you'd think about buying a stock that had broken out with high volume. So, will Yahoo be buying my? I have. Oh, I don't think they're going to go down there. Had somebody in the dens asking, will Yahoo be bought by Microsoft? I have no beliefs that Microsoft doesn't kiss the ground every single day that Yahoo buyout that was turned down by Yahoo at Microsoft for 30 bucks. They don't kiss the ground every day that they didn't buy them all those years ago. Right now, Yahoo's on a giant tear. Are the underlying fundamentals there? The answer is no. Normally you find, just like BlackBerry, you'll find somebody come in, they'll do a lot of financial engineering, and the purpose of that is to get everybody that's stuck in these stocks a chance to get out. Now, they can't get out very easily on the way up, but they'll get it up to 30, 35 bucks, something like this, and then they'll sell it and distribute it and continue putting bogus PR output on it and try to get and distribute as much of the stock to the rube buying public as they can. The chart really doesn't look all that bad, but even if you thought that there was a good chance that you'd want to buy Yahoo, certainly not at these levels, and maybe if it comes back down to 30 bucks on very light volume, that would be the first place you'd want to take a look at it. But no, I don't have any belief that anybody is going to buy Yahoo out. It's probably one of those. There are a lot of stocks that right before the end burn twice as bright. I would not be surprised that Yahoo comes back down with heavy volume and blows apart. But if it did come back down with light volume at 30 bucks, maybe you are seeing a radical change in the company. I don't believe so, but it certainly could. Anyway, we wanted to go back to other stocks that were moving out here. Of course, Yahoo up strongly. FFIV. I haven't looked at that one for a while. Let's take a quick look. You can give me a call at 877-927-6648. That's 877-926-6648. And, of course, reminding you there are on the front page of TFNN that you can sign up and use the art of timing the trade charts for $1. And we've got a webinar on the 16th with Tom and I again. So look forward to seeing you then. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we're going to look at a few stocks moving out here today. We have the right one here? Yeah. Just let me get, there we go. Get everything situated. Wanted to look at St. Jude Medical. There at least looks like that there is one bit of consensus on Capitol Hill, and that is the medical device tax be taken off. Just about everybody dislikes this on both sides of the aisle. And apparently there was some discussion out there this morning before the open that if there is one thing they're agreeing on, that this tax will probably be the first victim of any kind of agreement. St. Jude Medical popped on that STJ. Nice moving up here. You got some fairly decent volume, and you really are looking at kind of a sign of strength above the last August 9th high, $54.06. Had 1.8 million shares. You got 4.5 million shares already today. So if you're looking for some stocks, of course, you'd probably want this thing to come back down in the mid 54 range to look at it again. It's already wouldn't be chasing it here, but if this thing has a nice move up, pulls back with light volume, you do have a significant breakout in St. Jude Medical. In other stocks and commodities of interest, gold not doing much, but I'm not surprised. I think kind of a half-hearted bounce off of that 1277 area. I was looking for a test of 1275, which we haven't gotten yet. Even though it's $2 less, I still kind of think that we're going to at least get one more piercing of that 1275 level, and that's going to tell us whether we get $1,200. So I'm not too worried that gold is going to leave the station without me, but it is going to be fairly interesting watching this. There may not be one correct answer. There may be many in this, but still see a lot of weakness into yesterday on gold stocks, at least the gold miners, and that we're not getting any kind of movement or fear of gold buying into a weekend where the government shut down, we've got a president out of the country, the dams busting, and the nuclear power station's on fire, aliens are attacking us. Certainly should be the way that we're looking at it. Of course, fairly interestingly enough, also, a lot of yelling and screaming about crude and the so-called hurricane. Now, I've heard stories both ways that, well, the hurricane could come in Saturday morning or Saturday night. And then I hear half the people on Bloomberg saying the water temperatures less in the Gulf, especially up there by the New Orleans area. And then I got people telling me the water temperature is higher. And when you go and look at the government websites, it basically shows that they are off about 5 degrees from this time last year. So while we had a very warm springtime, the water has cooled off a little sooner. And to tell you the truth, I don't know which one to believe, so I'll go to the actual futures, and they're only up 62 cents. They're telling me that the water temperature is less. They aren't telling me that there's a great deal of concern out here. If there was truly a hurricane coming in that would cause disruption, I think we should at least have had a $3 or $4 move up in crude going into the weekend, and we haven't. Look for this thing to sell off come Monday unless there are a lot of reports of damaged wells and wellheads. But at best, I think they're looking at something like 70 to 80 mile an hour winds, which are not a lot for that area of the country. They're certainly used to a great deal more. Of course, silver, it's all off about 5 cents out there. Not a big deal, 21.74. But really what I'm seeing out here today is a very interesting market that is up. The dollar's up. Dollars up, really not hitting gold that much, but a lot of these things that have been interdependent aren't showing a lot of congruence right now as we look at the marketplace. Anyway, you can give me a call at 877-927-6648. We were looking at St. Jude's, and there's some other ones out here. Seeing a lot of stocks just hovering around these highs, and I suspect they are waiting for some kind of deal to come out of Washington. Probably wouldn't be pulling the trigger with the headline risk out here. Headline risk is just that. One headline and you're you're a winner or a hero or a zero. And unfortunately, a lot of times these stocks line right up. One of them I'm looking at is Algerian Pharmaceuticals, AEGR. This thing's been banging away right at $97. Now, one of the things that I haven't talked a lot about on this show is the preponderance of stocks in $90 to hit 100. And it is the same reason why candy ends in 99 cents and fuel. If you buy gasoline, it ends in $3.12 and 9/10 cents. It is a human phenomena, mostly capitalized in the United States, that most people don't register that 9 as a full 1 into the next decimal place. And I think it carries through the market. I've seen several studies, but there's like an 80% chance that when a stock hits $9 that it's going to hit $10. That is almost identical when a stock hits $90 and hits that it's going to hit $100. I would not be probably betting against this thing failing before it hits $100. And even though the volume's light out here, you get 1 or 2 days, the volume doesn't come back in, it certainly can come right back down. When we look at Priceline, pretty good indication, PCLN, when this thing hit $900, that it was going to hit 1,000. Now we've gotten up to 1,074, a lot more than I thought we ever would on this. But there tends to be a lot of people still short a lot of these big tech names without a good signal that they're giving up. And this thing has been in an up channel that just hasn't quit since $677. In fact, I think on my on the website at TFNN, the web page for the Path of Least Resistance, my daily newsletter, showed a Priceline out here making one of the best patterns ever, right back around at $200. And this thing has been on a move since then. Really hasn't given you a whole lot of reason to think about selling this thing. Still hasn't. There's nothing in here that would say. Now, Tesla, I wanted to talk about a little bit. TSLA. This thing sold off, and we haven't talked much about it. I thought I would wait just to see what happened and what shook out. But we're probably seeing a Tesla is what they're calling the Toyota moment. And that is, finally, they've got something that looks a little bad for them. Interestingly enough, someone caught on a cell phone camera a Tesla car burning. And it doesn't matter whether it's gasoline or electric batteries. Stored chemical power is very hard to diffuse. The thing, though, is once you get rid of oxygen, the fire will be out in a gasoline-powered car. Not true with a battery. A battery has that power. It's stored in that device. It is tough for it to actually get out of that device rather quickly. So electric cars, I was going to do something tonight on the Tech Insider about the Tesla Hindenburg. It is a issue with electric-powered cars, whether they're going to be powered by fuel cells, by batteries, by supercapacitors. It's not like this power just goes into the air like a hole in a natural gas tank on a car. There's no ways to easily vent it. When these things do short out, if they are not properly set up with fuses in them, they're going to go until that energy is dissipated. Doesn't matter really how much water I think you throw on a battery. Once it shorts out, that thing is going until the chemical reactions are over. And pretty much what we saw in this Tesla car in the YouTube video that hit it. It's rebounding a little bit out here today. The problem I have with Tesla is not that they're not a short car, but the technology that are built on means that if they had a decent valuation, they would be selling somewhere around 325,000 cars. Unfortunately, at about 200,000 cars, there's no lithium to make the batteries to make these cars go. Now, maybe people will start digging holes to find more lithium, but for the most part, all the lithium mines are in Chile. They're along the left coast of South America, and they control somewhere around 48% of all production in South America and 40% of it just in Chile. A very heavy concentration. And of course, if you knew that the car company could never get more than 200,000 cars, it would be problematic. Electric cars still face one major hurdle, and that is getting off batteries. And that will always be the case. Kind of interesting in fuel cells, because I had some experience in that, was the saying around fuel cells was always, fuel cells are the technology of tomorrow, and they always will be. Because, of course, fuel cells use gold and platinum, and nothing worse than the last 10 years of a non-ceasing rally in gold and platinum and silver, all the chemicals that you need to make a fuel cell work. Now, a lot of people are working on trying to come out with cathode and anodes for fuel cells, and that is a possible technology that could make a Tesla car really run. But at the moment, it looks like Tesla's setting up all their stations for electric battery power. And that is going to be a tough road to hoe with a single car in a market where you're only selling in 14 states. And that is going to be it. Again, you can give me a call at 877-927-6648. I'll take a look at a few other cars. Been wondering what's going to happen with bankrate.com. Let's look at just a little longer time frame out here. This thing had a huge gap down, and it's right up here now. Kind of interesting that we could see this thing blow apart on the May 2nd of 2012. So we're already a year from this huge gap down and had 4.5 million shares. We are just starting to hear that right now. And, of course, what are we in this thing? 258,000 shares, 600,000 shares 2 days ago, 623,000 shares. Certainly not seeing any kind of volume that we'd really think about as significant. What is a Twitter's symbol? Twitter's symbol is going to be TW, it's going to be TW something or other. I'm trying to remember what it was. I saw it today on the TV. We've got plenty of time. We didn't even get into that, but a lot of people are talking about the IPO. Talked a little bit about it yesterday. The absolute minimum of time is 21 days. Well, the SEC is closed, so don't look for Twitter's IPO to come out in 21 days. That would be perfect. Almost all IPOs take somewhere between 30 and 60 days to come out, so we're looking at something that maybe is a Thanksgiving time frame in a normal environment. Now, what would happen with Twitter with the SEC closed down and not actually doing much? SEC has, I think, enough money in their specialty account to stay open for 10 days, but for the most part, they're not taking a new work across the bow. And I'll check a little bit later, maybe in the break, to find out whether they're going to process Twitter's application. But my guess is that 21 days would be rather quick out here, and probably looking at Thanksgiving for Twitter. We're going to talk about the economics, because one thing that does happen when you have an IPO is you've got to release your books, and Twitter did. And I think that there's a lot of interesting stuff in what Twitter's done. We're going to talk about some of the things I like in IPOs, some of the things I don't like in IPOs in the Tech Insider hour tonight, in the 5 o'clock hour with Tom O'Brien. Anyway, this thing's come into that gap right here, so I'm going to be watching very interestingly enough. Is the idea that these companies like Bankrate are going to be doing better because interest rates are going to be going up? Fairly interesting move out here. Or just that the volume is going to be high. Well, one thing we know is this thing is coming back and filling this gap, and it's doing it with extraordinary light volume. Some of the others that have been doing, already back out here. TWTR. No, yeah, TWTR. Yep, that's it. We'll be back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we'll see what's going on. Anyway, I wanted to look at a few other stocks. Still have time, if you're quick on the draw, to give me a call, 877-927-6648. And yes, the Twitter symbol will be a TWTR. And of course, like I said, I think we're probably looking at Thanksgiving for a rollout for Twitter, Tweeter, and Twitter. So no big hurries out here, but we'll be talking about it in the Tech Insider Hour tonight with Tom O'Brien. As a reminder, you can get the Art of Timing Trade Charts for $1 for the first month and attend our webinar, which is going to be the 16th, and pretty interesting. So, be nice. Anyway, just wanted to go back and look and see what we had for the market. I think we're getting a buy signal in the general market. Of course, we've got the headline risk out there. It looks like everybody's thinking that we get some kind of deal And of course, we're back over what I looked at, which was anything above a close above 1686 was going to be a buy signal. Certainly don't have a lot of volume, but not surprisingly, I imagine we're going to get a lot of short squeeze come any kind of movement. And some of these stocks have already squeezed, and those are probably the ripe ones for a short on any kind of bounce in the marketplace. But, Friday out here in October, we should be turning somewhere around 3.5 billion shares on the consolidated tape. We're turning almost 2 billion shares right now. So there isn't a lot of volume. There's no conviction up, no conviction down. I can't really say that I'd be long or short any of the indexes. There's a handful of stocks out here that look rather sweet for short opportunities just because they're coming up against such a massive supply lines. And a couple of them that I've looked at have a huge change in most likely their profit margins. And we saw what happened to Apple at $700 when everybody figured out that their profit margins were going to be under assault. $700 to $400. Of course, they're back up there. I haven't looked at Apple a little bit. It's kind of been hanging around that 480 area for a little bit. Let's take a quick look at it. Yeah, I mean, this thing's pretty much basing out. Of course, we got Carl Icahn out here flogging this old nanny every chance he gets. Anytime it looks weak, he comes back on CNBC at noontime and starts telling everybody why they shouldn't be short it. But you do have a setup here that could turn sour very quickly. And I covered the last couple of weeks in the Tech Insider what that problem is. But Apple certainly is losing its technology lead on the hardware side. Still fairly good software. They may be taking another shot to the ribs fairly quickly on hardware. I think we're probably going to see that in the next month. And I'm kind of talking about that. I think that they've got some vulnerability, not in the hardware side, but back into the software side. I think we're going to see some new hardware coming out of a couple companies out here, and they've announced it. They're in production, and we're probably going to see that product in November from them. And I think Wall Street isn't talking about it yet, but will be. Anyway, you can always get a free 2-week trial of either my daily newsletter, which is Faster Trading, or my investment letter, which is the Tech Insider. Anyway, you all have a great, safe day. See you in the 5 o'clock hour with Tom O'Brien. We'll be talking technology then. I suspect he's going to be talking a lot about gold. Goldfinger, gold member. Anyway.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global has a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.